Good afternoon, ladies and gentlemen. I'm Amena Bakr. I'm the Chief Opec Correspondent for Energy Intelligence Group, and I'm delighted to be moderating today's session. The title is Welcome to the Hypergrid. I was a little bit confused by the title, but we'll be talking about energy efficiencies. And as an OPEC correspondent, this is not something that we tackle every day, but I'm seeing more and more companies invest in efficiencies in order to mitigate the bad environmental impacts. And I'm delighted to be joined by all of you, the stellar panel today. Allow me to introduce my panel. Next to me is Sllvie Jehanno, Chairman and CEO of Dalkia. We have Raj Rao, President and COO of Global Infrastructure Partners, who have, in fact, identified infrastructure as its own asset class. I've just found out that today. Kola Karim, welcome, Chairman of Shoreline Group. We have Engineer Ibrahim AlJarbou, CEO of SEC. Welcome. And last but not least, Pratik, Agarwal, Managing Director of Stereo Power Director from Mumbai. Welcome. Sllvie, I want to start off with you, and the topic is energy efficiencies and electrification. I'm going to flip the question around and ask you, what if we don't electrify? What if we don't move in that direction? What will happen?
So maybe a few words before answering you. It's a great pleasure for me to be here in this great event in such place. Just to tell a few words about Dalkia. Dalkia is a big subsidiary of the EDF group. I think you know EDF very well. And we are in charge of energy services, energy efficiency, and also we develop a lot of district networks. Dalkia is 20,000 people in the world and between 6 and 7 billion euros of revenues. And so that your question is so important because if we want to succeed in energy transition, and we know that it is so urgent to succeed, everybody knows that we have the climate change and we don't know exactly what will be the good race, but we know that there is an emergency. And energy transition, for me, what does it mean? It means to consume less, energy efficiency, to save energy, and to consume better. And what does it mean to consume better is to consume low carbon energy. So part of the solution is both. So if we save energy, as you know, the International Energy Agency, they say that the energy savings is the first fuel. First fuel, that it means that the better energy, the best energy is the one we don't consume. So we have to think about that, and there are some solutions. We can implement solutions, we can change infrastructure, we can change technology, and also we can work on the behavior, we can work on energy management, and of course it's a big part of our competencies in Dalkia. And the second part is you speak about electrification.
Yes, that's right.
When I say to consume better, we have to consume renewables, to consume different kind of energies. And when you look at electrification, that means that maybe it is easy to produce energy with renewables, wind, solar. We have also the question of hydrogen tomorrow, hydrogen with electricity, green hydrogen. With energy, it is we have some ways to storage, so to build smart grids also, very special infrastructure. So electrification will be a big part of the solutions. And maybe between the two topics we have, and it is so important in this country, air conditioning, cooling systems. Mm-hmm. When you look at cooling systems, you have the choice to put one system per building, or you can imagine new district networks with a big plants. Mm-hmm. District cooling networks, and it's much more efficient that if you put one individual system per building. So, it's both electrification and energy efficiency.
Together. And
yes, together.
The interrelation between the both. And I'm glad you brought up cooling system. We have Engineer Ibrahim, who I'm going to come to you in a minute. On that, Raj, I want to ask you, you deal a lot with private investors. What appetite are you seeing from private investors in investing in energy efficiency, green energy, and so on?
I think the appetite is huge. Let's start with that. If you think about the world and where the capital needs to go in and the amount of capital that needs to go in, and we heard this in the morning today from the president of the World Bank and from all the panelists, that there is not enough capital in the world to fund that. So the private sector is where a significant piece of that capital is going to come from. From our own perspective, a huge part of what we are investing in is going towards energy transition. I say this, we invest in infrastructure. There's a lot of energy transition related investments today which are necessary and essential from a decarbonization perspective, but have different risk profile from a market risk or a technology risk perspective. That's something we, as an infrastructure fund, have shied away from. But there's a huge part, a substantial part of the energy value chain, which has got a lot of sustainable characteristics, stable cash flows, which is where we have invested in. So from a private perspective, I see the capital flow continuing to increase. I mean, we've talked about somewhere between 100 to 150 trillion dollars of capital that needs to go in to meet decarbonization.
That's almost 5 trillion a year.
5 trillion a year.
That's a lot.
Less than a trillion
Where are we
today.
going to get that?
And that is exactly the point, that as markets mature, as the regulations become stable, as financing opportunities become clearer and clearer and de-risked, more and more money is going to flow in. I think the money into renewables has flown in already and will continue to flow. So we thought that the amount of money that flew into renewables in the last 10 years, the same amount, if not double of that, will continue to flow in the next 10 years. But beyond that, to the point that Sllvie just made around the rest of the energy value chain, whether it's battery storage or EV charging to electrify the grid, behind the meter stuff, is super critical. Managing load becomes very important. Think about this, if everybody comes back home at 6 o'clock in the evening and turns on their kettle for a cup of tea or a cup of coffee,
Or the
it
AC
surge in
here in the
demand.
Gulf,
And if everything
yeah.
is to come from renewables, something has to provide the backup. And that's where the issue is going to be. So the short answer to your question, huge capital in my mind from the private sector.
And is this 5 trillion a realistic target?
It's a target. Whether we get there all the way or not, I don't know, but it's definitely a massive opportunity. No question.
Kola, I'm coming to you now, and let's talk about the energy transition in Africa. I'm Egyptian myself, and I was in Cairo this summer. We had power cuts, and when you face the harsh reality of energy security, you know its value. So I want you to walk us through on what needs to happen for the continent to move in the direction of the transition. What is realistic and what is not?
Thank you. Good afternoon, everyone, and thanks for inviting me. I think Africa sits in a very tragic position when you look at energy security vis-a-vis where the world is going. Africa today sits in a stand potential of huge energy mix. If you look at hydro potentials, if you look at the potential in transition natural gas, if you look at solar potentials. But unfortunately, over the years, the focus has not been on the strategic path. It's been focused on just the strategic energy reserves of the potential countries. I come from Nigeria, the largest economy in Africa, and the largest population also on the continent. What you need to look at, the potentials of what Nigeria has as an example, is we have 210 TCF of natural gas, yet there's not enough electricity. If you look at the Grand Inga project in the Congo, there's been talks about this over the last 20 years. Nothing's happened.
Is it infrastructure?
Infrastructure. So the problem is the capital to point to getting adequate energy security on the continent is just not there.
Why?
The reality is about de-risking on what you're selling. The African story has never been told by the Africans. The African story has always been told by others from outside looking in.
It's the hunter and the old tale, the hunter and the prey.
This is the true position of things. So if you're telling my story, you can't tell it better than I could tell it. So the reality is capital is available all over the world. Capital is looking for returns. But the return and investor is looking for adequate information, and the story is important. This is where Africa becomes an unfortunate disposition, because the story is never told right. It's always, when you look at the headlines, it's always about the negatives, the hunger, the wars, the coups. It's never about the potentials of about 1.4 billion people. It's never about the potentials of opportunities in 54 countries, diverse cultural disposition. So the reality is Africa and Africans ourselves, we need to tell our story. We need to lead the charge to tell the potentials of what Africa has to offer to the world and the opportunities that the continent itself offers to its people to creating that stability. Look, if you look at what's happened the last couple of years, you're talking about mass migration of able-bodied young Africans into Europe. There's a lot of money spent in trying to stop that. The only way you can stop that is prosperity. Without prosperity on the continent of Africa, you're still going to have the young, able-bodied wanting to look, we're human, look for prosperity elsewhere. And that's the biggest driver. So in a nutshell, the reality is we need to tell our story right. There's opportunities on the continent, diverse opportunities in natural resources and energy security, in the businesses we're in infrastructure, in oil and gas, and power. These are strategic areas of investment on the continent that deserves outward look in with the providers of capital, understanding 65% of this continent is under the age of 35. So you're talking of longevity in your investment horizon. And that's what Africa has to offer.
We didn't even talk about mining and critical minerals that are needed for the energy transition, which is a big piece in the puzzle. Engineer Ibrahim, I want to come to you, just picking up on a point that Sllvie mentioned about cooling, the cooling that's needed here in the Gulf region. And I want to know what you're doing here in Saudi Arabia to improve efficiencies, particularly during the very, very hot summer period.
Thank you. Thank you for participating here, and glad to be part of the panel. First of all, let's say electricity. What's always the strategy of providing affordable, sustainable, and secure energy. This was happening for decades, and it will continue. The thing is that the focus, the change, and today is the theme of the new compass. The new compass is that we worked for a long time only for providing, there is a supply and demand, where we provide, forecast the demand and provide the supply. We worked a lot on the supply resources, diversifying the supply resources, increasing the efficiency, which is leading to sustainability, which is supported in sustainability. We invested a lot. For example, in Saudi here, SEC has invested since 2000 almost more than 400 billion Saudi riyals. It improved. Even demand has doubled and the capacity has tripled, and the demand has tripled, but also the efficiencies has been improved by about 15% upgrade. Nevertheless, there is a new era that we're going on. The new era is two things. One is the diversification of the resources. Saudi Arabia has previously relied on oil. Now we're moving to rely on other resources, renewable, hydrogen, even provide new technologies in the developed technologies. But the other point is there is a disruptive and trending demand diversity. The demand is changing today. With the technology, with the digital, with the data centers, with the AI, machining, and the customer needs, the customer is leading the market. So whatever the customer is utilizing or using today, it will affect our our future. And we'll have to invest even more in building more grid, building bigger infrastructure, but not forgetting the sustainability, not forgetting the efficiency.
Can you just tell us how much you're investing exactly, just to give us a kind of idea where...
I'll just give you a round number, which is from now until 2030.
Yeah.
If we're going to meet our targets, we have to invest about 500 billion Saudi riyals.
Wow.
Almost.
And that's all from, I mean, this is government, private sector.
From all, yes. Just to
A lot.
support the grid and improve the efficiency. The complexity is coming there, that you have to invest in the digital to be smarter grid, but not only that, on the AI, because the demand side has a complexity of mix, of diverse, that you cannot control, you cannot predict. You need to be smart and efficient to predict the demand. Plus, when you do that, you can manage the grid and control even the source. So it's a complex without investing not only in infrastructure, but even in people, in digital, and how can you manage all this complexity from source to consumable.
Thank you for that, Engineer Ibrahim. Patrick, we heard the view from Africa. We also heard the view from the Middle East here, or specifically Saudi Arabia, being based out of Mumbai. Just walk me through what's India's vision when it comes to the energy transition. Where are you seeing capital being spent, and what's the appetite really out there? I mean, India is still importing, one of the most biggest importer out of this region in terms of oil. So do you see that dropping in the future?
So quickly, thank you for having me here. My background is I run two businesses. One is building round-the-clock renewable energy platforms and supplying to hard-to-abate industries in India. And second is building transmission grids on build-own-operate bases in India and in Brazil. India has had a fascinating renewable story, right? For a country that is still at $2,000 GDP per capita, consumes only 1,200 units per capita of electricity, 1/3 of China. It's targeted to get to 40% renewable clean sources by 2030 of its mix, which is currently about 14%. And for that, it's committed to build 500 gigawatts of renewable sources by 2030. And what I find even more fascinating is that while the whole world is building wind, solar, hydro, etc., but very few places in the world have actually brought in private investment into grid rollout. And my personal belief is that the top 3 barriers to actually bringing net zero or even close to net zero, of course, is the regulatory process for building renewables, storage. The biggest, in my view, is the availability of grid. And that's one thing I think the world has forgotten, and it's sort of now an afterthought. And just the previous panel, the speaker was talking about how they are focusing on the grid here in Saudi, which is very good to hear. But India brought private investment into the grid almost 15 years ago. And because of that, we don't have a single monopoly, but 15 different companies bidding and quoting and trying to build transmission lines and substations at the fastest possible pace. I think that's been a very good success story in India.
Okay, and in terms of India's future oil imports from the region, do you see, I mean, the transition being there, is it really picking up? Can you see that the role of oil is, you know...
I mean, it's a very tough one, right? I don't think oil has peaked for India because transportation hasn't yet been decarbonized in a significant way. It's mostly two-wheelers, three-wheelers, and the price of batteries is still a significant barrier, even though the total cost of ownership is lower, but the upfront cost is so high that is still not a significant inroads into a place like India. So I would imagine there's some inflection point in the next 3-4 years when the entry cost for an EV becomes lower, and then boom, you have everybody buying only EVs, and then you begin to see the peaking oil at that point in time.
Sllvie, I'm going to come back to you. I'm going to read to you something from the IEA. Basically, they said, despite worldwide government expenditure of about 250 billion annually in energy efficiency, this only managed to improve energy efficiency by 2%. Okay? So how important is energy efficiency in reaching net zero targets?
I think it is so key, you know. And Saudi Arabia, for example, has understood that very well because there is a very ambitious target in 2060 to be net zero, and and there are lots of projects of energy efficiency. And you said 2%, but when I look at the Dalkias project, it is often much more, 10, 20, 30, 40%.
Don't worry, Sllvie. The IEA is usually wrong.
Yeah, no, I don't know if it is wrong, but it is average. And we know to go further. Just an example, in France, last year, the energy minister decided to implement a very special plan, which is called the sobriety. So that means to save energy a lot plan, and only to work on behavior. Only behavior, just to change the temperature, to digitalize everything in the building, just maybe of course, to switch off the light and so on. And we win in France 10% of energy. So it was quite simple. So it's interesting to see because it was not big amount of money. It was only just to change the behavior of people, of course, but also of buildings. And so that means that we can go, with big target about that. So, and for example, here we are very proud to be the partner of the Kingdom Center to help them to save energy and to operate and maintain the buildings. And I am sure it's also a good way to reduce the carbon footprint. So, we have to think about that, and we have to put this topic as a priority. And to win that, I think we will have 4 key factors. 4 key factors. First, of course, the policy, the willing to fix a target. Of course, to fund financing, subsidies. The third one is people. We will have to get the competencies, to hire people. We are going to hire people. We hire people, Dalkla, each year, 3,500 at that time, people. And I think it will be so key to have the good competencies everywhere in the world, to hire young people, to train young people, and of course, to be attractive also for female. And the last point will be technologies, R&D, just to go further. You speak about AI, so artificial intelligence. I'm sure it will help us to go further.
Thank you for that, Sllvie. Raj, when we talk about private money cares about one thing: returns. So in terms of returns, and I'm talking in general, are you seeing projects related to the energy transition bring back returns to investors that are satisfying?
Look, I won't specifically go into the exact returns, but the short answer is yes, in some cases. And energy transition is a very, very broad definition. And in my mind, there are pieces of the energy transition equation where the returns are there to be made, where the structures are in place, and there are many pieces of the energy transition where returns are a little bit trickier. And I think the places where returns have got trickier are where there is a lot of market risk, or where there's a lot of technology risk, or where there's a lot of supply chain risk, right? I'll give you an example.
Sure.
Offshore wind. Everybody is absolutely essential and key to decarbonize the world. Everyone talks about hydrogen, green hydrogen. Green hydrogen will eventually only happen in the combination of massive solar or massive offshore wind. History says people made money in offshore wind, but if you look at what has happened in the last couple of years, there's been a massive supply chain related issue. It's a very long lead development cycle. So you secure a project, you get a PPA today, but by the time you're taking a FID, it's 4 years, 5 years out. In that interim period, if your costs have gone up, returns have got compressed. So where the world is going is to figure out a way to de-risk that. And France is a good example where you get inflation indexation in your construction cost between signing and you take FID. That is not what is happening in many other places in the world. So you need to have mechanisms like that which will evolve. So look, there will be a lot of money that will be made in energy transition, but there will also be a lot of money that will be lost in energy transition because the reality is some aspects of this have got risk characteristics that are quite often outside of your control.
Who should bear this cost, Raj? The
Look,
private sector or
ultimately, it
government?
has to be a combination. I mean, governments and regulators have to absolutely think about it. Private financiers, debt or equity, have to think about it. And ultimately, the consumers will have to bear with it. If you think about policy in Europe versus the US, what's the big difference? In Europe, there is a policy of a carbon tax. In the US, it's all subsidy. And the reason you have a carbon tax is because the government wants to, or the EU wants to socialize that cost over a lot more people, which is the right way to go. But then you get into the point where inflation is an issue and cost of living becomes an issue. So it's a very tight and balancing act. So it has to come from contribution from everyone.
Absolutely. Koala, when you hear the IEA saying that oil and gas demand is going to peak by 2030 and discouraging new investments in new projects, particularly in Africa, let's face it, what do you have to say to that?
It's a very dangerous statement because if you think about what's been happening, and especially the last week has actually sent the message home. The international agencies preaches something, then you got the big American players buying each other up. So building, if you look at it yesterday, the announcement came, Chevron bought Hess last week, ExxonMobil bought Pioneer. And on one hand, you get this news saying it's going to peak. Then it's not sending the right message. But the reality is this. As Africans and African producers, we need to start looking inward, looking at investing in the natural resources on the continent, looking at mobilizing capital. There's not necessarily global capital, but a lot of African financial institutions are now coming of age. I'll give you an example. 25 years ago, if you look at Nigeria, the financial institutions in the country will probably club together to do a $250 million deal. Today, you have financial institutions who's got a single obligor limit of about $400 to $500 million. They can compete with global banks. And those are the type of financial institutions that are supporting businesses like ourselves to continue investing in fossil fuels. Now, is it going to peak? When it comes to Africa, Africa suffers first. If you look at global divestments from major oil companies, majority has been from African countries, where they've been operating, mind you, for 30, 40 years. But all of a sudden, the pressure comes on, divest the African opportunity first. But that is the opportunity we see. We go in, mobilize capital, acquire those old or aging oil fields, put more capital and technology into them, and produce them and extend the lifespan of these assets. And those are the type of opportunities today that meet the large-size African corporates plus international partners are seeing on the continent, and is very, very good value for money.
I'm glad you brought up Nigeria. I mean, covering OPEC, I've known that they haven't been reaching their targets. They're building up capacity. So you think it's on track to reach 1.7 capacity?
Yes. What is that? Last month, we were 1.43. And in the next couple of months, look, the biggest problem has always been aging infrastructure. Most of the pipelines and network in the country to export from the fields were built in the 70s, 50-year-old. Now, with reinvestment in building out new infrastructure, we will see adequate production going through those new pipelines and getting the production targets met.
Thank you, Koala. Engineer Ibrahim, I'm going to go back to technology and AI, and I want you to, again, speak to us about Saudi Arabia's experience with deploying AI and technology.
It's a long-lasting
No,
subject.
you have 2 minutes.
Actually, digital and technology is very important, that we have to invest even in R&D and innovation. Even we don't get a good financing, from our colleague. But we have to invest, for for a lot of reasons. We are lucky in SEC that we invested in smart grid, a long time ago, more than a decade ago, 15 and 20 years ago. And we passed a journey that we reached today, that we are ready for the new era, where we can utilize all the tools, all the technologies available in the market, that it will be easily and with a minimum investment that we can utilize. So this is important. In a nutshell, as you see today, globally, and especially in Saudi Arabia, digitalization is very much mature. And we reached, points where we are utilizing daily and hourly and in the minute, these tools and these digital technologies. And the thing is two parts. One is investing in digital and technology, data centers, AI, machine learning, even new technologies. The other point is utilization and serving the customers and training the people, which Sllvie has mentioned yet, that our people should be capable of utilize or using these digital tools to improve efficiency. So the last point is improving efficiency, and to the first point, which I saw, is affordable, to provide affordable service. So you invest, improve efficiency, you bring affordable service to the customer. So it's a link, it's a chain that we have to continuously invest, but it is becoming a very high importance. And our subject today is the hypergrid. And when we say the hypergrid, it's the mix in everything, in the grid, in the supply, in the demand. It's a big mix, either in the mobility, the panel just we heard about the mobility, there is a lot of things there. It will be digital, it will be electronic, it will be high tech. So we need to be adaptable to these new technologies and fast enough to be smart, to be efficient, and to deliver a qualitative, affordable service.
No, that's a great segue into what I want to ask you next, Patrick, is why is the integration of large grids and advanced transition technologies considered the linchpin in the energy transition agenda?
So in my view, the technologies, at least the generation technologies that it takes to get to about 70% green penetration in the whole world is already here, in my view, which is large-scale solar, wind, offshore wind, pumped hydro, and a bit of nuclear, a bit of batteries. And now what is missing, however, is real large investment in global grids. So for example, if you're a small country and you want 24/7 green power, you may not have all the resources, but your neighbor or your neighbor's neighbor will certainly have all the resources. And that's what we've seen in Europe, where UK has 4 links connected to mainland Europe and 4 more being built. Saudi Arabia is building to Egypt, and there's talks of building to India. And as you geographically diversify your grid, the wind is always blowing somewhere, the sun is always shining somewhere. And I think taking advantage of that and really getting to, because the challenge with renewable, frankly, is only one, the big one, which is how do you get to 24/7, right? You can do it in the day, you can do it in the evening. How do you make it true 24/7 like coal or gas? And I think the answer lies, personally, I believe the answer lies in large global grids, which eventually span around the world, and you can instantaneously move power from different parts of the world.
Perhaps part of it is storage as well, which is we're seeing a lot of investment go into storage. We're almost out of time, but I want to ask a question to all of you, and we'll start with Sllvie here. If you can just tell us in 30 seconds or less, do you think the energy transition will be led by businesses or policy? And which direction do you think would be more effective in advancing the transition? Sllvie?
Both, because I think you need an ambition, you need also lots of agility to decide in the country, and you need also the competencies and the companies to realize and to succeed in the projects and to implement the projects. So both. And I would just maybe one sentence about energy efficiency. When you save energy, you save also money. And I think we have to think about also a fair and just energy transition. It will be also a key factor to succeed in.
Raj, businesses or policy?
Both.
Okay.
Just one thing. There was a lot of talk this morning about Global South. In my mind, it's business more than policy in the OECD world because the policies already exist. But in the Global South, it is the other way around. You need the policy first and the money will flow in.
Kola.
I think both. Commercial return is important, but that's buttressed and supported with strong policies to ensure the sanctity of that contract.
I have another question for you, Kola. One big misconception people have about Africa that you want to erase.
Strong democratic structures, sanctity of contracts whole, and effective return from a young continent with diverse resources.
Thank you. Ibrahim, businesses or policy that could lead the transition?
Yeah, I think both, but the most important point is that business will lead, policy and business should be cooperating and collaborating together to assure the end target, which we are talking about always, affordability. Affordability to the customer, to the consumer is very important. So the balance of business and policy should be always working together.
Patrick, last word is yours.
For me, it's very clear. It has to be policy. I mean, the business community isn't good at making the rules and just being good for the sake of it. Like, you need the rule makers to make the rules, and then the business really responds very quickly, because when they make the rules, the returns get created, and then business responds to make those returns and fill that gap. For me, the India story has been all about superb policy for where it is today. So policy for sure.
Well, I want to thank all of you. This has been a very, very insightful conversation. I hope we come back here, perhaps next year, with an update on what's happening. Perhaps we'll get breakthroughs in technologies, who knows. So thank you very much. Please, let's give a round of applause to our panelists.